You are listening to Small Business Straight Talk with your host, Amber De La Garza. Amber is a sought-after coach, trainer, speaker, and writer who gives small business owners the straight talk on productivity, time management, business systems, leading your teams, strategic decision-making, and mindset. No BS, fluff, or overused jargon. Just actionable strategies to get results and succeed in business. And here is your host, Amber De La Garza, the productivity specialist.
Welcome, and thank you for listening to the Small Business Straight Talk podcast. Today is episode 393, Tax Secrets, How to Keep More of Your Money with Mark Kohler. If you're a small business owner who wants to learn effective business strategies, improve time management, and elevate productivity to maximize profits, reduce stress, and make time for what matters most, then you're in the right place, and I'm so glad you've joined me. I'm looking forward to bringing you our guest, Mark Kohler. So Mark, actually, his team reached out and pitched me to be a guest on the podcast, and I was like, yes. What they didn't know is that I actually used his firm to do our own trust personally, as well as taking some tax law, crypto type workshops and classes. And my husband and I have followed him for quite some time and followed him and his partner and their advice and just really enjoyed the content that they put out just for us as individuals, but also as business owners with their tax advice. So this was definitely an easy yes. I want to share with you a little bit about Mark Kohler. Mark isn't just another CPA, and you will certainly find that out as you tune in further to this episode. He's a wealth building, tax slashing, business scaling expert who's been helping American entrepreneurs succeed for over 30 years. As senior partner at KKOS Lawyers, co-founder of Directed IRA, 5-time best-selling author, Mark has been a trusted voice for small business owners nationwide, has been named Tax Advisor of the Year and been a guest for Fox, Bloomberg, The Wall Street Journal, Yahoo Finance, NBC, Wharton School of Business, and the World Economic Forum. Mark's Main Street Business Podcast, Tax and Legal 360 events, social media platforms, and Main Street Professional Certification Program help take the complexity out of taxes, enabling thousands to keep more money, grow faster, and build lasting wealth. I wanted to talk to Mark because we work really, really hard to be business owners. We work really hard to make the money. He knows exactly what we're talking about. And his job and mission is to follow the tax law, but let you in on how can you keep more of it by knowing more, by working with the right professionals, by understanding how to stay compliant with tax, but get the most out of the money you make. And before we dive in and start chatting with Mark, I want to remind you that if you have not already taken me up on taking the Next Level Business Owner Quiz, you should do that right now. 3 short minutes. Hit pause and head on over to amberdelagarza.com/quiz to find out what's most holding you back from taking your business to the next level. Once you identify what those challenges are, I will send you a curated playlist of specific episodes that give you strategies you can implement in your business immediately. And now let's meet our guest and get to the straight talk. Welcome, Mark. How are you today?
Oh, I'm so excited. It's summertime now, finally, and I'm past my Tax and Legal 360 event. We just got back yesterday. Woo, we're finally breathing. So summertime.
Yeah, that's great. I know you do a lot of events. We just met in real life, but virtual. And I just let you know that I've been in your world for several years. We've attended your virtual events. You have done my family's trust. Your firm has. And I was really looking forward to having you come on here because I have followed you and know that you have a lot to share, a lot of great knowledge to share about small business tax strategy. So I want to dive into it. But before we do, can you just share a little bit about yourself that we wouldn't have heard from your official bio? And what are your interests in taxes? Because you're not your typical tax guy. That's why we follow you. So what should we know?
Well, thank you. Well, a few interesting side notes. I grew up in the Northwest, born in Oregon, raised in Washington. So I do believe in Bigfoot. I think that's an important thing that we should all be on the same page on. Very
Okay,
important.
good.
If you've camped in the Northwest, you've been freaked out once before, and everybody from the Northwest knows what I'm saying. Anyway, so I went to high school and in the 80s and just loved it. Ended up at University of Utah. And so I'm a Ute fan. And then I got a master's in tax, went to law school and la. But the interesting fact, I guess, is I've always been an entrepreneur. I was a kid with the lemonade stand. And when I started college, I started a janitorial business. And for 8 years, man, we mucked it out. We had 3 kids. I would work 24 hours straight, sometimes cleaning buildings and restaurants. And I did my own books. I did my own tax returns. And I was going to accounting school. And I wasn't your typical accountant because I wanted to be a business owner, but I really believed that if you know numbers, if you run the show, and a good business owner has to know a tax planning and accounting because it's their number one cost in battle. And so that's why I've always been an entrepreneur and went to business school to focus on accounting, not because I was an A student in accounting, but I was the class president and a B student. Now I hire all the A students. So that's what I do.
Very, very good. Very good. So your interest really truly started in the intersection between business and seeing how important it was to know the numbers. And I think what you were saying but didn't say is like how to keep more money, because that's what we really all want to talk about. If we're going to work that hard, which you did in your business, and I know many of our listeners feel like they work really hard, we all want to know, how do we keep more of our money when it comes to taxes?
Oh, yeah. Well, I'm with you. And I think saving taxes is the gateway drug to small business. And I teach a lot of just good core business principles too, because I've been a business owner this whole time and trying to build my own practice. And we're now at 150 employees and 4 companies, and taxes are a part of that. But I just love business ownership. And so if you want to save taxes, you got to have a small business. If you want to just get a W-2 in corporate world, it's just fine. Get the benefits, and that's a wonderful career path. There's now 1 in 3 Americans have a side hustle. That's a small business.
Yeah.
And so we can start saving right away. So, okay. So I want to throw out a good summertime tip, and then we can get into some good ones too. But your corporate board meeting, anybody out there that has an LLC, corporation, anything, any entity at all, you are actually required to have an annual board meeting. We call it a board of advisors in the LLC, a board of directors in a corporation. It gives you better asset protection, and it is a great tax write-off. So that summer barbecue is an opportunity to have your friends or family over, and when things settle down, you get around a table and you go, hey, let me tell you about my plan the rest of the year. I need your input. I need your advice. I want to share my goals. I want to talk about our next project and da. And you can test ideas and test names and do a little product testing or focus group stuff. And that's a really helpful thing for business anyway. But now your entire barbecues are write-off, and some of you may be taking your family members for that board retreat. It could be in Mexico, it could be in Vegas, it could be anywhere. And a summer board meeting is just fundamentally a good business strategy, a good asset protection strategy. And we're going to take a tax write-off for all that travel and hotel and food.
So you get to pick who your advisors are. So as long as it's like you're really, sharing ideas, getting feedback, it doesn't mean that they actually belong to a board, that you are selecting who your advisors are, i.e. who you're inviting to the party or the barbecue, correct?
Yes, they're not going to be owners. And they're not going to be officers, but you will designate them in writing in your minutes. You are now on my board. You are on my board of directors or board of advisors. And those minutes would go in that cool little leather corporate book that you have with your LLC or corporation. And so it is a formal position. There's no liability to them, and they don't own anything. You're just going to hear them out. You may not even take any of their advice. but these minutes are really important too, because you're going to have accounting elections and accountable plans, to a way to write off home office and auto and reimbursements for computers and cell phones. All those provisions need to be in your minutes anyway. So we do that in one of our companies, Main Street Business Services. But we'll give you the questions and get you started. But the first thing is, all of you listening, if you have an LLC or a corporation, plan a board meeting this summer. It's a fun family thing to do. Get best friends, mom, dad, brother, sister, kids, whatever.
Excellent. I actually have a question, and this is coming from a conversation that I had with a client recently. And in passing, she made a comment that made me kind of take a breath back. And I said, hold on, what did you just say? And what she had said was that she was stockpiling cash in her business account because she didn't want to pay taxes on it.
Oh.
And she is an S-Corp.
Oh.
And I said, hold on. You are paying taxes on all of it, whether you take a draw, whether it shows up in payroll. And so I just wanted to throw that to you. And I want to bring it up because she is very smart. And it was just an oversight that her accountant didn't explicitly tell her or explain to her, and she didn't know to ask the question. And I think that that's really common. So I kind of wanted to take that case study and just kind of, what are all the things we can talk about with regards to like LLC, S-Corp? What is your methodology on when is it time to go on payroll as a small business owner? There's a lot to dive in there that I know you have some opinions on.
I love it. And so the first thing with your story, Amber, everyone should know, an S-Corp is not a bad thing. An S-Corp is a great thing. So just because this friend of yours or client didn't understand it doesn't mean the S-Corp is bad for everybody listening.
Right.
Where you're an LLC, if you keep the money in the LLC, it doesn't matter either. An LLC and an S-Corp flow through. So I'm going to pay tax whether I take the money out or not. If I made profit, so let's say I had 10,000 in sales, 3,000 in expenses, so I've got $7,000 in profit. Whether you take that $7,000 out of your LLC bank account or corporate account doesn't matter. Now the beauty is you don't have corporate tax, so you only pay tax once. But it's attributed to you as the owner, whether you pull it out of the account or not. So that's called flow through taxation. The third point I'd make is with an LLC, which is where we want to start when you're a brand new business owner, we're going to convert it to an S-Corp at a specific time to save taxes. An LLC, everyone, a limited liability company, does not save you taxes. So when you make that same $10,000 with $3,000 in expenses, you're going to pay self-employment tax on that $7,000. That's 15.3%. So I'm going to pay close to $1,000 in taxes on that $7,000 before I even pay state or federal. It's called self-employment tax. Every LLC pays that. But when you become an S-Corp, if I'm making $70,000, now that self-employment tax is $10,000 because it's 15.3% or whatever that profit is. Holy crap. If I convert to an S-Corp in that model, and it's going to vary depending on the situation, but that model, I'd split the income in half. I'd probably take 35 in payroll, 35 as a dividend or a draw or a K1, just to make it simple. I'm going to save $5,000. So the S-Corp saved me $5,000. And that's when we want to make that jump, is when we start to make $50,000 or more, we're going to graduate from the LLC to the S-Corp.
Yeah. And for my client, what was interesting is her taxes were being done right. Like nothing that changed in her world except for how she got to think of the money that stayed in her business account versus, I'm paying taxes on it anyways. Like I can bring it into my personal account and now go invest it. Or I don't know, go on a vacation or do something with it, where she thought, if I don't cross the line from my business account to my personal, I'm saving myself money. So I'm only going to do that when needed. And, I think that that's common, but it's subtlety. So I just wanted to say something too about the S-Corp. I just want to take the mystique out of it. It's literally a piece of paper that your CPA submits for you. We want to make it sound so like, oh my gosh, I went to, LLC to S-Corp. And really, your accountant is just filing an additional document on your behalf. And now you're an S-Corp that can save money.
Yeah, it's super expensive, though. We charge $250. So I know it's a way robbery. But it's an important form to do right. Some clients screw it up. There's 2 pages. You have to sign both pages, don't forget. And it'll get rejected. If you don't, then you're really screwed. So you got to do it right, but it is terribly expensive. And the other thing that you said that was interesting, and I want everybody to know this, when you say go on payroll. Going on payroll doesn't mean, everyone, that you're going to have a cash flow crunch. I get it. In a small business, income's up 1 month, down the next, well, up 1 week, down the next, whatever. You're not going to take a paycheck and put the stress on your business to deliver you a paycheck and the cost of going through all that crap. What you're going to do quarterly is it's called an after the fact payroll is what the approach is in the kind of the industry, is that every quarter you're going to file a payroll report and designate how much would have those paychecks been. And as long as you send in your deposit, the IRS is happy. So you don't have to get a physical paycheck, people. Every quarter, we call our clients, hey, how much did you make? Oh, we made 20 grand. Okay, great. Let's, do a third or a half or whatever percentage we want to go to payroll, do the report, we're done. So the S-Corp payroll service is going to run you about $1,000 a year. But if I can save $5,000, let me see, do the math. Spend $1,000, save $5,000. Yeah, I think that's a good deal.
Absolutely. So I'm curious, are there any different write-offs when you're in S-Corp other than the obvious that we're saying payroll? Because you came out of the gate with some fun summer things like a board retreat. Is there anything that's different from LLC to S-Corp on how you can write things off?
There will be differences in the way you do it.
Okay.
But there's not an extra write-off for an S corporation. It's the effect of saving on self-employment tax. That's why every landscaper, restaurant owner, dentist, doctor, engineer, accountant, influencer, NIL athlete, we set up S corps for NIL athletes on a regular basis here too.
Yeah.
So your S corp is to save on self-employment tax, but all the other write-offs are going to be generally the same, and it's just the way you do it is sometimes a little different procedure. Yeah. Also, you get better audit protection. S corporations are audited 15 times less than a single member LLC. So for anybody out there like, well, it's going to be more risky. No, you actually reduce your chances of an audit by 1,500%. So the S corp rocks. It's just
that's a really big reason to go ahead and do that for $1,000 or whatever it's going to cost you. I like that. All right. So we were actually talking about you across the dinner table a few nights ago. And we were talking about you because my husband had watched a video. I had watched it. We have not yet executed
the new accountant number 2 with Ben Affleck, and you were thinking of me?
Yeah.
Yes, thank you. All right. Keep going. All right. I understand.
So I had been doing some updates to my website. And my son's like, let me take a look. So we're at dinner. He's on his phone and he starts to audit my website. He's 15 years old. He's got an opinion because, he took a computer science class and he's like, Mom, I think you have this little wrong. How about this? Look at this form, whatever.
Because he's a teenager. So he knows more than you. Yeah. All right. Keep going.
But he was giving great constructive advice. Like once you get past, hey, I was just telling you I updated my website and now I'm getting all this unsolicited feedback. Why we were talking about you was because my husband was like, I think it's time to put them on payroll now, right? So you can put your kids and pay them. And we've been like, they have to have a role. Well, I think he's to that age where I think it makes total sense. And I told him, I'm like, if you want to strategically go through the website and then provide me a report or a video that can be summarized through AI of what you think needs to be tweaked, I'll pay you for it. Let's talk about paying kids through the business.
Oh, great summertime strategy as well. And first of all, you said he was 16.
15. He just turned 15.
All right. Mm-hmm. Well, he should be on your board as well.
Okay.
Because he can help provide advice. Like, Mom, that's a dumb name for a business, or that's this or this or that. And again, a 15-year-old on your board, they're going to tell you how wrong you are. So that's good. Very important.
Exactly. He needs a title for that, I'm sure.
Yeah, he needs a title. The know-it-all. I've had him. Trust me. So here's the thing: we don't have to wait till our kids are 15. They can be 5, 6, 7 years old, cleaning the office, cleaning the shop, helping at rental properties, pick up mails and garbage and this and that, shredding paper, stuffing envelopes. But I'm glad you've identified. And when all my kids got into their teens, they were helping with social media and video. They were phenomenal. So to this day, most of my wife and I's kids help and work in the business in one form or fashion. And it's great. We all work together. We're all in a common enterprise. It's super fun. But anyway, so don't wait till your kids are 15. They can get a job sooner. Number 2, you're going to pay them based differently based on your business structure. We would a couple tips. Now, by the way, these are chapters in my book, The Tax and Legal Playbook. I've got blog articles on this, my YouTube videos, just like you were saying, Amber, you and your husband watch some of those. We'll walk you through this, and we have tax advisors that can help you as well. But it's not very complicated. But just realize it's not, oh, write my kid a check. You've got to follow the procedure. So you're not, if you have an S-Corp, you are never going to pay them through a W-2 because then you have to withhold FICA. And we don't want to withhold Social Security and Medicare. You're not required to as parents. So if they're under age 18, we're going to pay them through a little support company, maybe an LLC here, a rental property there, whatever it is. So S-Corp owners have to get a little more creative because we don't want to give them a W-2, and we don't have to. But with that said, once they turn 18 and move forward, then we're going to do more of a 1099 scenario. And unless they're working in the business every day, like a rank and file employee. And 1099s are great for this. And so no matter what type of business structure you have, during the summer, kids might be helping with, another project, a rental property, a board retreat. And by the way, last point, Amber, thanks. I'm sorry. I got to say this, is you're not trying to find a way to give them money that you're like, I don't have any extra money to give them. You're paying them for something you were going to pay them for anyway. So if you've got kids going to college and you're paying their tuition, no. 1099 them and let them pay their own tuition. You've got kids that are teenagers that need school clothes, school lunch. These kids should have their own bank account. So your business is paying them to pay their own school lunch and school clothes. So you're just changing the way you do it. It doesn't cost you any more, and you're saving taxes. And kids don't pay taxes on the first 15 grand approximately with our standard deduction this year. So they're not even paying taxes on it. So just get smart.
So you would be able to get 15 grand back into the family funds for things that you would have already paid tax-free.
Yes.
Yeah, I'm so glad you said that, because as you were saying, I was literally going to say, so I would just save it. I would save it to invest it. I would save it for college. Like, how many expenses does a 15-year-old boy have at this point? He doesn't have a lot, but we could be using that money smart.
Yes.
In a smart way.
And I totally recognize some of you listening are like, oh, wouldn't that be nice if I was Amber or Mark and I had an extra 10 grand or 15 grand? Blah, blah, blah. I get it. We're all at different stages. I remember so many years of my life, I was living month to month. But so let me explain 2 points. Like, yeah, it's tight. For those out there that things are month to month and really tight, you open a bank account for your kids and quit paying for their stuff. Pay them, take a write-off, let them pay for their own stuff, and you just generated a tax write-off. So you don't have to be rich to do this. You're just channeling the money in a different way. And that's the trick. Now, for those of you that are, hey, we're doing pretty well. Things are going okay. We're making a little money right now. What should we do, Mark and Amber, to be a little more wise? Now we want to not only pay them to pay for their own crap that they're paying for, but now let's double down. Let's open Roth IRAs for them. Let's open Coverdales for college. We may even want to put them on the solo 401k. Let's help go buy a rental property together as a family. So now you're shifting income into this overall legacy plan you have for your family, and they're all on the board, they're all employed, and you're building it all together.
Incredible. Do you have any other strategies that you think that people aren't thinking of? So we talked about board meeting. We talked about paying your children.
Yeah, here's another one that just comes to mind is I was just researching the other day, and it's fascinating, is that the cell phone is a tax-deductible fringe benefit when a company provides it to an employee in order to stay in contact with them because they have a role. And they could be a board member, they could be a rank and file employee, they could even be a vendor that you need to be in touch with so you can pay for their cell phone, you get a write-off, and it's not income to them. It's a tax-deductible fringe benefit, and it's allowed even in the family scenario. So if your kids, and maybe some of you are still paying for some college students' cell phones, but any kid that you have a cell phone for, or iPads, or laptops, or anything that they might use in the business, now that your son is auditing your websites, you may be like, oh, well, he needs a better laptop to analyze my little websites. Okay, so all of those electronics are 100% deductible in the business when used by that employee for the business. If there's some de minimis use personally, so be it. It's a fringe benefit that's deductible, and it's, I think, often overlooked strategy.
Yeah. I heard something recently, and I'm not going to get the stat completely right, but the essence is that in tax code, say, I don't know, 10, 15% is how you pay it, and the rest is how you don't pay taxes. All the rules about how you don't pay taxes. Is there any truth to that?
Well, yeah, and it's not a cynical thing. You see, the tax code is set up to motivate us to do things. And so if you
Right.
do those things, you get tax benefits. And some people look at it as like, ooh, you're taking advantage of the tax code. So you're screwing us over or whatever. No, the government said, go invest in oil and gas, and we will give you a tax deduction for investing in oil and gas because we want the United States to be energy independent. And when Donald Trump said, drill, baby, drill, he meant it. So
Right.
you get actual tax benefits for investing in oil exploration projects or oil royalties here in the US. So is that a loophole? Maybe, but we as a government said that's a good thing. Oh, put handicap access in your business. You get a tax benefit. Oh, invest in an opportunity zone area where we're trying to revitalize an area of town that's dilapidated, get a tax benefit. Go buy solar or energy efficient appliances or equipment at Home Depot, get a tax credit.
Right.
The list goes on and on and on. And some people will go, well, that's a loophole. No, you're actually making the country better. You're making society better.
Yep.
Doing things that the government will incentivize you to do, and you're working it. Work the system, people. Don't bitch about it. Embrace it. Freaking go hit it.
Yeah. And small business is the core of the economy. Like truly we are. And so you're employing people, you're being innovative, you're solving problems, and you can use the incentives to ensure. And I mean, this is getting my own personal opinion, but my opinion is, yes, we pay taxes, we want schools, we want roads, we want all of those things. But we also have a duty to have fiduciary responsibility to our own businesses, to our own families. And with that being said, it means being smart with your money, understanding the rules or the playing field that you're playing on, right? Like if you're a business and you're a certain industry, it's your job to understand that industry and play those rules and play them to your benefit. We are all on the same playing field when it comes to paying taxes. And so understanding those rules, using them to work for you and not against you and not staying ignorant to it is my personal opinion about it. Because what do they say? There's only two things we're all going to do is die and pay taxes. Well, we better get good at how we're going to pay taxes and understand that, because so many of us are like, yeah, it's one thing we have to do, but I don't want to know anything about it. And I think it's incredibly empowering to know more so that you don't feel like it's just happening to you, but you can play the game.
Yeah, no. And I loved how you said too, it's the small business or Main Street America is the backbone of our economy. And we've already seen, so I know it's messy right now, everybody, what we're seeing go through the House and the Senate and the new big, beautiful bill and what's it going to look like, yada, yada. But we already know that both the Senate and the House have said, we want to keep the small business tax incentive of the 20% QBI, the qualified business income deduction, which means any business owner, all of you out there, whatever you make in your business, you get a 20% deduction right off the top and don't have to pay taxes on it. So if you take the risk to go revitalize or help stimulate the economy, you get 150 grand of revenue, you have 50 grand in expenses, and you net $100,000. You start a landscaping business, a painting business, a storefront, online business, whatever you do, and you make 100 grand.
Yep.
This deduction allows you to take 20% off the top, and you only pay taxes on 80 grand. That's a big deal. And we've already seen that in the Tax Cuts and Jobs Act, and it's already a part of the Senate and House's preliminary bills. So that is an incentive that you all can take advantage of by starting a business. And small business owners pay less in tax. It's a fact.
Absolutely. I want to switch gears a little bit and just see what your thoughts are on how look, when I said that I had taken some of your courses, I don't think I said what, but I had taken your crypto tax retreat. I mean, this was years ago. It was like a full day. And I joke with our friends because my husband and I are into crypto. And I joked with my friends and I was like, oh yeah, we're the fun couple. Like for a fun date, we sat and watched an entire tax conference about what are the rules and how do you set yourself up for success if you're going to invest in crypto. And for my husband and I, we were geeking out about it. And I get it's not everyone's jam, but what do you think the intersection is between what you're seeing in cryptocurrency and small business, if any?
Wow, big question. It's funny you bring that up. I've got one of my crypto tax experts right over here. He's a law clerk now, wanting to go on to law school. He taught at that conference you were at.
Okay.
And that's a big question, the crossroads of crypto and small business. I'll just say a few words, and that is crypto's here to stay. It's going to be a very, very important currency that I think business owners can use and need to embrace and understand that they need to be able to take it as a form of payment and also hold cryptocurrency for, I think, security and safety. There's a lot of development going in the crypto industry with small business and the metaverse and blockchain technology. A lot of people don't know blockchain technology has been around for a long time with credit card companies and banks. It's just now open source in the world of blockchain and crypto. So I just think my biggest takeaway is you can't ignore it. Start to learn a little bit about it. Yep. And there's some great tax strategies in the crypto space. And I think there's a lot of money to be made. And it's going to help commerce. It's going to help people, even in the NFT space, knowing how that you can take digital images and use, whether it's artistic or in commerce. So keep your eyes open. I know AI's kind of got all the spotlight lately, but crypto's still here. It's still alive and well.
Yeah. Yeah, I agree. I agree with everything you said. I think it's going to be a big disruptor to the financial industry. And therefore, it's going to be a disruptor to our businesses because we make money, we collect money, we spend money, we do all of that. And I think that right now what I'm seeing is a big surge in stable coins and people that aren't quite sure, like, oh, cryptocurrency, like Bitcoin go up, Bitcoin go down. Like, why would you spend that to buy a service or goods or a product? But stable coins, I mean, they're really trying to pass some laws right now around stable coins. There's a lot of technological developments happening around stable coins. And what that will mean is more businesses are going to have to accept payment in digital forms such as cryptocurrency and stable coins.
I'll just say that too, if you're a business owner, make it easy for people to pay you. That's the takeaway. Yeah. It drives me crazy when people, where was I the other day? Well, I only take cash. Oh, so you want me to help you avoid taxes? Is that it? I was at a farmer's market and I went to go buy something at the farmer's market. This person was like, I only take cash. Oh, really? I went to the next booth. Oh, I'll take a debit card or I'll take it, electronic payment. Well, I'm going to buy it from you. Because I'm not going to just help you live under the table, you freaking cheapskate. But that's a different tangent of mine. I'm sorry. But the point is, if you're a business owner, whether it's through a website, shopping cart, or you're out doing business day to day, make it easy for people to pay you. And if that's a stable coin or crypto or cash or electronic payment or Venmo, quit worrying about getting 1099. You should be paying tax on it anyway. Why don't you learn some tax strategies and you'll be fine.
Absolutely. Absolutely. All righty. So one other thing that I just want to highlight for you or your business is we did our Trust 3.0. And I know that's more on a personal side, but what advice would you give for a small business owner in creating a trust for ensuring protection, asset protection? And how does that go hand in hand if it does with being an LLC and with those protections?
Oh my gosh. I'm so glad you brought it up, Amber. I'm going to say 98% of everyone in America needs a trust. And that's an estate plan. It's a will, a trust, powers of attorney, healthcare directives, all those things. It's bundled up. And we, every year, do an estate planning special. And it's ironic that you just asked that. I know you did your estate plan with us. We do it during Memorial Day. So we're giving up to $500 off on any estate plan. So if you don't mind me saying, Amber, get over to koslawyers.com.
No, please do.
Yeah, if you get to our law firm and it's easy to find, just type in Google Mark Kohler's law firm, you'll find us. But our estate plan is so powerful. And everyone out there, you shouldn't own anything. Let your trust own it. It doesn't cost you anything in taxes. It can provide a lot of privacy. It protects your wealth from the next generation and the government and lawyers, and it keeps your life private. And so your LLCs should be owned by your trust. Your life insurance, your home, your businesses should all go into your family trust. It gives you a lot of security and peace of mind, and it doesn't have to be expensive. So check that out. For any of you that need an estate plan right now, please give us a buzz. We'd love to take care of you.
Yeah. And I just want to add to that as well as my own experience was, it's something you have to do. You have to contact the banks and do the things and fill out the paperwork and provide the information. But it's not as big and ugly of a task as you think it is. Your team really made it easy. It was like a form and you fill it out, you give them the information, and just being organized about it. I think that it's worth it for you and your family. It's worth it for your business for all the reasons that you said. And so if you've had it on your someday maybe list, maybe now's the time to make it a now thing for your to-do list.
It's Father's Day coming up. Buy your father a estate plan. He'd love it.
Yeah, it will make it easier for you. Like that's a good idea, actually, because I take care of my my elderly aunt, and that was one of the first things that I had to do was get all her financials in order and her legal status and her will, and that is an overhaul. So give it as a gift to your father, your mother, whomever you're going to ultimately have to be taking care of. You're doing your future self a favor.
Yeah, you'll be the beneficiary of that gift too. No pun intended. Okay, pun intended. Right.
Excellent. Is there anything that I didn't ask you that you wanted to share with our audience today?
Oh, I love long walks on the beach and just enjoying the summertime. And thank you so much, Amber, for what you're doing and trying to help the small business community and keep up the good work. And it's an honor to be here. When we get this new big, beautiful bill or whatever the hell it is done, have me back and we'll break it down for everybody.
I do. I want to break it down factually. I want to see exactly how that's going to impact us small business owners. Thank you for closing out with that. Our listeners don't know, but that was initially what we were going to talk about. And we both had decided, man, it's in the messy middle. Whatever we're going to say is probably not what it's going to turn out to. So I would love to break that down with you. Mark, thank you so much for being here. And we'll be sure to share out all the links and resources of how you and your company, your YouTube channel have supported our family, and they can get those links and resources too.
Thank you so much. We'll see you next time.
I sure hope you enjoyed today's conversation with Mark. He is full of energy, full of insights and strategies that could really make an impact in leaving more money in your pocket. And I am all about leaving more money in your pocket. As I said at the top of today's episode, we work so hard for the money that we earn as small business owners. And sometimes we are paying more in taxes than we should or need to because we don't quite understand what is available to us, how we can structure our businesses, and what is appropriate to write off to ensure that we keep that money. I wanted to give you one last tip because it was brought to my attention that not everybody actually knows this bit of information. Did you know that hiring a business coach is a tax write-off? In fact, I'm kind of proud I'm getting written off. I am a write-off, and this will be the only time in my life that I say I am happy to be written off. But I am an investment as a coach, as a business coach, and not just me, by the way. I'm saying me because obviously those are the services in which I provide to my clients. But in our businesses, when we are getting support in such a way as a business coach who is helping us with strategy, advising us, allowing us to show up our best in our businesses, I am not the tax person. I definitely consult your own tax professional, but in 15 years, I have never seen that I and my services were not able to be written off. And in fact, I often see that towards the end of the year, when we realize maybe we're making way more money than we want to because we are going to have to pay extra taxes, and you're looking for ways to reinvest those profits back into your business. One way to reinvest in your business is with software and computers or technology, but another way to invest is in your own skill set as a business owner. So if you want to learn more about my coaching services, head on over to amberdelagarza.com/coaching. Schedule a discovery call so that we can talk about what working together might look like and if working together is the next right step for you and your business. Again, you can learn more and schedule that discovery call by heading on over to amberdelagarza.com/coaching. And if you are new here, I just want to say welcome. Thank you so much for tuning in. Be sure to hit subscribe so you don't miss another episode. And if you've enjoyed the advice and the conversation that we had with Mark today, be sure to share it with another business owner who you think would find it valuable. So that's my straight talk for today. Until next time, have a productive week.